everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Wednesday, March 27, 2013. Well, a very strong black-bodied candle today, a very bearish candle that continues the trend to the downside, a candle with a lower high and a lower low, and a very large black body denoting the sellers making a substantial amount of net bearish progress on the day between the open and the close. The sellers have maintained the downside momentum that they found two previous trading days ago. Trading day prior to today, we had a spinning top, indecisive type candle. Candle of indecision. It did set the market up for a potential change of trend, but the market failed to trade anywhere near the previous high to give us any hint of a higher high and a higher low, and the market has established a lower high and a lower low once again. So with this bearish candle, we've seen the sellers lose some commitment. We have this shadow on the bottom of that candle, but the sellers have still taken control of this market at the close of the day. They have closed down below the midpoint level and the low, suggesting that it's a moderate amount of control, fairly strong. But importantly, they are in control. We haven't closed anywhere near the midpoint level, so no suggestion that they've lost control of this market. The shadow on the bottom, however, is important, and the market has interacted with the top of a highlighted zone of previous support and resistance, and that's an important zone that I highlighted quite some time ago that's now coming into play, and today we've seen price rejection from there, so that does suggest that there is potential for the market to bounce off this level and to perhaps interact with the 128.57 level that was previous support, and now for today's candle has provided resistance and has potential to provide resistance in the near future. So that small shadow on the bottom of this candle highlights the sellers losing some commitment, so a slight worry about that. So we really do need to watch that low very, very carefully. As this market's trading at the moment, there's no clue as to direction, but with this solid bearishness that's been set up, there is potential for the market to trade within this zone and find support anywhere within this zone, and the zone extends from roughly 127.50 down to about 126.50 roughly, so quite a large zone of potential support for this market. In terms of the Fibonacci extension, we're examining the relationship of the current first time frame downtrend to the previous time the market was trending down, and here we've just seen the market close below the 100% level in a bearish manner. So this does suggest that there is good potential for the market to test down to the 161.8% level at 126.21. Now, bearing in mind that that is below that zone, so the likelihood of this market reaching that level is not too good because of the solid support above where the 161.8% level is. But the Fibonacci ratio gives us a more likely target, the 161.8% level at 127.16. We're in an expansive mode of the Fibonacci retracement. We've traded through there in a strongly bullish manner, strongly bearish manner today. Previous two trading days, we did see rejection from that level. We saw indecisive around the 100% level, and that did set the market up for a potential change of trend, but we need confirmation, and confirmation didn't occur, so the downtrend continued on its way with the sellers finding more strength, finding more downside momentum. But now this 161.8% is within that yellow zone, that highlighted zone that I've mentioned quite often in the recent past. Now, in terms of patterns, and here, if you recall, we had a small flag pattern from some time ago, and we had the trend leading into the pattern, the congestion area, and then we had a target down around this 126.55 level, and taking a trade based on that would have been quite profitable at the moment. As we've seen, the market has taken quite a bit of time to get down there and hasn't really travelled down there very smoothly. We've had a lot of corrections in the market attempting to find buyers and testing two very strong areas of resistance and testing just above the Tenkan-sen. But our target here will remain in force, 126.56, but now that we're very close to this zone of support, not a good chance that the target will be met. There is a possibility of it, but as I've mentioned, we could see this market find support anywhere within this zone, and that Fibonacci level is probably a good area that we could see the buyers come in. But the thing is that perhaps if anyone has traded this pattern, then perhaps they could think of beginning to take some profits, perhaps not all of the position, but some of the position, or certainly trail the market down with a stop, and the Tenkan-sen here would perhaps be offering a very good stop. The Kijun-sen is probably a little bit too far away for a stop based on trading that pattern. But in terms of Ichimoku, we're bearish market in all three timeframes, trading below the cloud, so bearish buys in the long-term timeframe, bearish in the medium-term timeframe by trading below the Kijun-sen, the pink line, and in the short-term timeframe by trading below the Tenkan-sen, the green line, and the Chica span is below the corresponding price action, so confirming the negativity that we're seeing in all three timeframes. The Kijun-sen and the Tenkan-sen are pointing down quite sharply, so that's reflecting the solid downside momentum that we have in this market at the moment. If this market does retrace, the Tenkan-sen will be the first area where the market will find support resistance, and it will offer itself as very strong resistance, and that happens quite often when a market has solid downside momentum, and momentum to the downside is determined by this angle of the Tenkan-sen in the short-term time frame, so that will be an area that should be watched closely if the market does test through the 128.57 area. It doesn't look likely at the moment. There is a possibility because of the rejection here from this area, but we do need to look at all sides of the equation here. But the likelihood here is that the market will perhaps test down through the low of the current candle, so we need to watch that very carefully for solid bearishness down below there, and test down to that Fibonacci ratio that we saw, and perhaps we need to watch the market, watch the short-term dynamics. If it does test down to that level, if we see buying coming in, it could signal a potential end to the first time frame downtrend. But certainly at the moment, in all three time frames and in terms of supply and demand, the sellers are in control.